All right, welcome to the Captain Curt Show, recording an episode today with my friend Kevin Trinh, and he is an ADU developer as well as a GC in San Diego, California.
Yep.
So thanks for coming out.
I appreciate it, man.
Yeah.
Always.
Kevin and I, we met, 5 months ago at Rich Summer's holiday party.
Right.
So that was super cool. I mean,
Right.
that was a pretty different party. I mean, it was pretty...
Serendipitous, but I mean, I love it, man. Every time you go to these events, you get to meet new people, great people like you.
Yeah.
And you just find bonds with them, and it just comes out very organic and natural.
Yeah, I thought it was a cool event. He threw a holiday party. It was black tie, and I honestly don't go to any of those parties. So I actually had to go buy like a new suit that fit and a black tie. And I don't find, maybe weddings, but my friends kind of got married years ago. So I thought it was actually really, really cool to see people dressed up and,
The people went all out with
yeah.
that.
Yeah, he
which
put
is
on
awesome.
a big party, so it's cool. But yeah, it's been great kind of getting to know you a little bit here and there, like through social media, really, and some friends that we've had. And we're both in real estate, but we do two totally different things. So, I wanted to, how did you get started in real estate?
I started in real estate I'm a contractor by trade. So I've been doing construction for the last 20 years. And when you're building stuff for clients over and over and over again, you're like, damn, what are they doing that I'm not doing? Why are they building all these wealth and they're, doing projects after projects and I don't even have a single property yet? So I started dabbling into it and I started looking into it about 8 years ago. Just buying single property, just to think about just owning, a single property for rental, not understanding truly what or where it's going to take and lead me. And then over the course of time, I mean, you start seeing people do more ADU stuff, and that's what led me to look more deeper into this ADU play out here.
So let's talk about your first property you bought. So you were a GC for about 12 years and then decided to jump in to start doing some investing.
Yeah.
What was the first property you bought? Was it a flip or a hold?
No, my single property was to own.
Okay.
Yeah, it's just to have a property a house to live in, right? To say that, hey, I own a single family house now. Right. And then it led into now, okay, we're making some money. Let's see how we can take advantage of some taxes. So we went to buy the second property, and the second property is the one where we're doing it more of as an investment.
Okay. Yeah. So is that a long-term rental? Is that what you did?
Yeah, long-term rentals.
Now, when you bought that second property, did you buy it and then rehab it?
I
since
did.
You have that experience?
Every single property I buy is rehab, and I always approach the deal as a fix and flip deal, and then exit out of that and hold it long-term.
Okay.
Yeah.
So are you using your first couple deals, were you using hard money loans to kind of...
For sure.
And for people that don't know, a hard money loan is kind of a private money loan.
It is.
At a higher interest rate because of the higher risk. Right. But as you do more and more rehabs and flips, you build a relationship.
Right.
And now you can get loans a little bit easier.
That's correct.
But it's a great tool for real estate investors. I did them on several flips that I did in Houston, Texas. That was where most of my flips were.
Yeah, and I think that, when you are starting out real estate investing and you just don't have a ton of money and capital sitting there, you need to learn how to use leverage. And the tools that we have at the time were hard money lending, private money lending, getting certain things where you can maybe pull some money from your equity from the original property that you own and burn it out and start that way. But it's very difficult for someone starting out and not having, $200,000-300,000 just sitting there.
Yeah, not everybody does. I mean, things are getting more expensive, so it's hard for people to save a lot of money, whether it's to buy their first property or a rental, their first investment property. Right. I think that's a big jump. And I know for me, I bought a duplex kind of after reading Rich Dad, Poor Dad and some other books, and I started 10 years ago, so not that far before you. And my second property, I used a HELOC on my first property, and now a lot of people told me, hey, that's really risky. And for me, I said, okay, well, it's worth it because it didn't put me into a crazy number of debt. I just withdrew $50,000 and I had like $250,000 in equity still, and my payment didn't go up very high.
Correct.
And that's what I did. So I put $50,000 into a second property. Did what you did. I bought one that was original 1994 from an older lady, and I moved. I didn't even move in. I stripped it down and did a rehab right away for about $45,000, and I got in for pretty low down. I bought it as a new primary out of state, and so I ended up doing an STR out of that one. Yeah. But what I really liked about it is I was able to refi that in 9 months and get all my $50,000 back out, and then I paid off the HELOC.
Oh, for sure.
So all it did was cost me a little bit of interest.
Yep.
but I executed it right, or well.
Yep.
I timed the market and all the other things. I guess just everything went well.
It always goes well, especially when you're buying these property and you're forced value adding to it.
Yeah.
You know that you're going to spike the equity once you're done with the property.
Yep.
So in your case, when you're buying it and you're exiting out in 9 months and you recoup that money, basically the BRRRR strategy, but on a fix and flip.
Yeah.
And for a lot of real estate investors who are new into the industry that don't understand the difference, I mean, fix and flip is basically you buy property and then you sell it back out and then you get the return. A BRRRR strategy is where you usually are buy and hold, but you can always enter with a fix and flip and then exit out and buy and hold the property still, right? So you can get creative with it.
Yeah.
And I think that understanding that will help you, be able to get into a single property and make some money right off the bat like you, bro.
Yeah. And, I think a lot of it is kind of either looking for advice for people that are already ahead of you doing that, and maybe really believing in yourself.
Yeah.
And I wasn't a contractor.
Sure.
But like my first house I bought, I didn't have any money.
Right.
I would bring a friend over that was an electrician.
Sure.
He would show me how to change an outlet and a fan. And then I go, oh, okay, I'm pretty smart. I could do that on the next one. He goes, just turn the breaker off and it'll go better, And so that's how I got my first house. I put $17,000 down, which I barely had the money for on that one. But you start learning skills. And now I don't touch construction because I'm 10 years in and it's better to pay a professional. Sure. It's not worth my time trying to change an outlet. Right. But my first 2 or 3 deals, that's what I had to do. Yeah. So did you have any mentors? I mean, I know you were already a contractor, but did you have mentors that kind of helped you along that you looked for advice early on?
My first few deals, I didn't have any mentorship, and I wish I did, because what that would help me, or what that would have accelerate the time frame of me acquiring more properties instead of just doing it on my own.
Yeah.
I think I'm a smart guy, so sometimes you're too smart for your own good and you think that you can just do everything yourself. So we went through all the ups and the downs and learned how to do it ourselves. But I wish I had a mentor at that stage. Now, later on, I started, of course, like you, reading Rich Dad, Poor Dad, getting motivated by that, understanding about the shift in mindset. And then technically that would have been my first mentor from that book. But later on, I have other mentorship. I had Dash and Win. I follow him very well, and I love what he does and how he teaches people on the simplicity of doing real estate investing. He's more of the BRRRR model method, but he teaches wholesaling, fix and flip, and all the other recipes for success in real estate investing. But I think that over time, you get to a certain point where you're like, okay, what's next? What's the next big thing? And ADU is the next big thing.
I love it. So I agree with you. TAC does a lot of good stuff.
Yeah.
He puts out really simple education.
Sure. Yep.
I think I guess you could say dumbs it down.
Yeah, he does.
I may be smart, but I'm like, hey, can you dumb it down to my level and make it real simple? And he does a great job. So he's probably a great mentor in that. And like you said, at some point you kind of outgrow it. You learn what you can from someone. Yeah. And it's not that you're done with them. It's like, okay, now I need to learn a different side of the business.
Right.
And for me, I went from, single family to small multifamily to mobile home parks. So all of a sudden I shifted. Not that I had a mentor, but I read mobile home park books and I started learning from people doing content on that or YouTube. And then I switched over again to like, okay, I didn't really like mobile home parks. There's too much competition. And then I got into industrial. And the first thing I did when I go, what is the industrial buildings? There's less competition in there. Yeah. I kind of found some mentors on YouTube and a couple books that were written. Yeah. And that's kind of where I went with it. So we'll get to ADUs in a moment because that's a really cool topic. But let's talk about who are your mentors now that you've been in real estate for 8 years and you're really focused on growing your business as well as ADUs. So who are your
currently
mentors?
I am part of the boardroom mastermind. I'm also part of their inner circle, the billionaire boardroom. Kent Clothier, he's my mentor at the moment. And he really helped focus and dial in on how I can scale this ADU play. Because it's one thing to own 10, 20, 30 doors, but how can you scale it to become a 9-figure business or exit? Right? That's the bigger picture where we want to take it.
Yeah, and it's great that, we got to connect recently when I saw you boarding a private jet with Kent. And I went, whoa. So I was searching for a mastermind. Sure. There's so many out there, right? Yep. For every asset class. There's some, in my opinion, that have maybe big masterminds that don't have a lot of experience. And I reached out to you and said, hey, what do you think And you gave me the reality. I said, hey, I'm looking at this other group that I have friends involved in. And then I reached out to you, and it was great to hear your take on Kent. But what was a big reason that you chose to go with Kent and join the boardroom for you specific?
For me specifically, I think that I've been through a few groups and mastermind groups. I've seen what they can do. I love the boardroom mastermind and Kent because of the authenticity, the rawness that he brings to the table, and how real he is. And there's a lot of groups out there that can kind of give you the same guidance, but as far as understanding the real estate market, at the same time understanding how to scale a business to a 9-figure exit, very few can do that.
Yeah,
he's one of them.
That's a great point. And I took your advice, and what I liked about him I call it an interview call. Yeah. They don't allow everybody in. It's tell me your story.
The other thing. Yeah.
And to me that drew, right? There's a lot of masterminds out there. I mean, Kent starts at $20,000 a year. That's not a small investment. And I couldn't afford that a few years ago. Even this year, I was like, man, I got a lot of expenses with business and this new office and podcast studio. But I knew for me, it was time to really go for it. Not just, hey, let's go make $1 million a year. Like, how do I catch up and really operate at my full potential? And I think it drew me to him. But during that interview call, he doesn't just ask, hey, how much money you're making. He doesn't care about that. He asked me, where do you see yourself and what do you want to do in 5 or 10 years? And for me, it was like, I don't need all the Ferraris and all the stuff that people flash on content. I could care less about that.
Right.
I want to spend a bunch of time with my kids at a beach in Cabo or here, whatever it is. Yeah. I want freedom. Yep. Currently I fly jets for a living. It's fun. It was my dream. But really why I fly jets is because I wanted to work part-time flying jets and invest in real estate. Right. So I'm kind of already living my dream. Yeah. And that's what I like. Recently I've been posting more about that. Is like, I'm happy where I'm at. Right. And that's a good way of life. Too many people are chasing the dollar and you're missing all the, you're missing all the current times and the process. But I love that Kent asked that. And because it goes, okay, let's hope you get there quicker than you would. Because I think he asked, how long do you think it would take you to get to your number goal? I go, well, the number goal has changed. It's gone up, which most people do. But I go, I think I could do it in like 7 years. And he's like, I think you could do it in 3. Yeah. And here I'm enjoying the group and these are the steps. And what I really liked about it was he asked me my biggest issue with the business. And because I'm a developer, as you know, it takes 2 to 3 years to get paid. Right. So right now I'm spending $10,000 or $20,000 a month on business expenses. Right. That's coming from my flying income. Right. That takes from the family in a sense. So he gave me a great piece of advice during my interview call. And he's like, hey, you should do some land entitlements. You should talk to, Brady McDonald in the group. He's doing very well. And he added that. And I went, wow, I'm doing all of the hard work. Yeah. But he goes, but yeah, then you can avoid the bank and the development and get some quicker cash in 6 months.
Bro, and that's what he always talk and preach about. I mean, sometimes certain things that you're doing already is great, but just that minor tweak or just, like a car engine, you tweak some part or something like that, and then it gives you an extra 100 horsepower.
Yeah.
Right. Just that minor tweak.
And kind of like you said, opening up your mind to not always, I think a lot of us that are successful or very driven at least, we know we're smart, but you're like, oh, this is the best way. Yeah. And okay, the way to make the most money in a development is buy raw land, go through the permits, build it, and sell it at some day later on. Yeah. That's the most money. But you can also make very high returns by buying land and just selling it. Or you can buy the land, do the permits, and sell it to a developer. Right. So he opened my eyes to there are more exits than just 1 or 2.
And we're in the real estate talking topic, but I mean we're kind of dabbing onto the masterminds and other groups. I think that the boardroom, one of the most beautiful thing I love about it is if you go to their quarterly meeting, they sit you in a room and basically you're in a room with other professionals who are doing as good as you are or even better. And you're now standing in front pitching what your problem is, what your pitfalls are, and you're being vulnerable. And that vulnerability is what creates that bond and learning from each other. And everyone there is just pouring into you to try to help you resolve that problem. It's beautiful, dude.
Yeah, and that's something that you told me and I liked about it too, is that there's, groups out there and I don't need to go to a meetup or something with a bunch of house flippers.
There you go.
It's not, I used to do it. Yeah. And you could learn from them, but it's not going to help me in my business specifically. Yep. So for me, being a real estate now developer in commercial, developers anyway, it's a similar process. Those are the rooms I want to be in, is in a developing room. Here's my problems with development, and move on. So I'm really looking forward to the May meeting. It'll be my first one, but super excited to be a part of that. But let's get back into the ADU and exactly what you're building. So that's your current niche. Can you explain, because some of these listeners might not know, what is an ADU, because it is a term.
So an ADU stands for accessory dwelling unit, and it's essentially allowing you to put a second unit on your primary home. In most states, this has been around for decades. In San Diego specifically, I mean, it's been around since about 30 years ago. Right now, what's happening is that because in the current economy, we have about 7 million shortage of affordable housing. And in San Diego alone, we were short 140,000. So how are we able to increase that unit count? The only way is to give people the ability to do infill development and build these ADUs out. And hopefully that it can help resolve some of the affordable housing issue, right?
Yeah, because there's not a lot of land for sale in San Diego. You know, it's been growing for years. I'm born and raised here, and it's just growing. They're developing.
It's growing, man. And these ADU programs are being more, aggressive, especially in dense areas such as San Diego, West Coast, Seattle, Los Angeles. And right now, it's starting to trend over to the East Coast in New Jersey, New York, Florida. So slowly, you're gonna start seeing this ADU thing start increasing its popularity.
Especially in bigger cities, like you said, where people are moving to.
Correct.
You know, we have people leaving California to go chase like lower taxes in Texas or Florida. Yeah. But guess what? San Diego, in my opinion, is one of the best places to live in the country.
People is going to come out. People is going to be leaving, but more people is going to be coming as well.
Yeah.
And how do you handle that influx, right? And so one of the things that people don't realize is that since 2016 to 2022, there's a 15,000% increase how much the ADU market is growing.
Wow. That's a big number.
That's a huge number, bro. Yeah. 15,000%.
Now, and one thing, so I'm starting to build my first ADU on my own property. It's been something I've been wanting to do for a while. Right. And the process, it does take a little while, but I know there's some recent legislation in California. Yeah. I believe there's one or two. You're the expert, not me yet. Yeah. But that are incentivizing California and cities to push the permits along quicker and remove a little bit of the red tape that we had in California as developers.
Yeah, I mean, we have certain bills out there currently in California that is, pro ADU, incentivizing people to build not just one, but multiple ADUs right on their property. And here in San Diego specifically, we have the bonus program where you're able to put not just one or two, but up to as many units as you can fit in a lot. Now, there's a lot of blowback from this because there's a lot of developer out there who's just being too greedy and putting on 43 units, etc., which is overkill, right? But for me, I do 5 to 10 units at a time, and we try to make our build very tasteful, understanding that these are regular human being moving in and trying to live there with affordable housing rent. So we try to do our part to make sure as a developer that we give people a nice place to live and it's affordable, but we're not trying to go out there and just squeeze as many units as we can onto a lot, because then it becomes kind of inhumane, man.
Yeah. And especially if you're putting so many units on a lot, if you're dealing with parking issues in San Diego as well.
Yeah.
So I mean, if you're trying to put on 20 units on a place that really only has so many parking spots, you're either going to get people not buying them, not renting them. Right. So there's a lot that goes into it.
There is a lot that goes into it. And since everyone is doing this ADU bonus program, where we're trying to differentiate ourselves from them by creating more, tasteful build with the amenities and the parking structures and stuff like that, that helps people, live a little bit more comfortable.
Yeah, it seems like I know there's a few people doing a bunch of content on ADUs. I know a few people personally, and I looked at getting into it.
Yeah.
And then I looked and I went, wow, there's actually a lot of competition. I would say in the last 2 years, a lot more in the game. Yeah. And as much as I believe in the San Diego market, I'm trying to do less competition.
Yeah.
And that's what drew me to industrial. But I think the ADU program is really great. And I'm seeing even my permits that I'm literally just starting to go through, but even the city of Oceanside, where my house is that I'm building, they have removed a bunch of the red tape where it used to take 6 to 12 months. Yeah. And now the engineers tell me, nah, once we're fully submitted, they'll do it in about 3. Yeah. And that's great for someone like me that is trying to move a family member in. I'm going to rent it out, but it's really just the price of the loan. So I'm not trying to make a profit, but I want to have a family compound.
Sure.
But one thing that I've done the research, and maybe you can answer this for me. So if it's going to cost me, just a rough number, $350 a square foot to build a nicer ADU that I would even want to live in.
Right.
And it seems like California is now counting the square footage as the same price as the square footage value of the main house.
In some instances, they are. The market is still too new to understand truly how they are appraising these properties out, these units out. But what we're starting to see is that they're pricing them about 400,000 to 500,000 per unit. A unit being about 600, 700 square feet. So in your case, it's going to be worth a little bit more. So in your case, you're spending $350,000 to build this thing, but in reality, it's going to give you a nice equity of about $500,000 to $600,000 once it's done. So now you're adding more value that you currently didn't have on your property just by building an ADU.
And I mean, that's for me. I don't plan on selling my house, but you never know, right? You never know if the kids gets handed down to the kids and then they sell it, but. That is like built-in equity.
That's built-in equity.
It may not be cash and it's not going to hit my bank account, but it's a really nice touch to add to the total value of my property. For maybe someday if rates come way back down. I mean, my interest rate's really good, but let's say in a couple of years with Trump, running the country, he likes real estate, he likes low interest rates. And man, if I can get that ADU done and get an interest rate below 3%, I can save me like a lot of money on interest. So that's something that I'm looking at, Now let's talk about, so how many current projects do you have? You build for yourself as for investments, but then you also build for clients.
No, at this current moment, I only build for myself.
Okay, good to know.
So I stepped away from building for clients a few years back. And the reason being is that because I think it's hindering my ability to focus on growing my portfolio. At the same time, we understand how difficult that client and relationship can be in the construction industry. So I think that putting all the energy into building my property is a lot more efficient than doing both.
That's a great point. I didn't know that, so that's great clarity. Because I see you putting out a lot of good content, walking ADUs. I actually love that stuff, and I'm implementing that just this week. I did some in Houston to just kind of educate people on how you build an industrial building.
Yeah, no, I think that it's great because, the social platform is so, I don't know, it has all these stuff out there right now. And some are great, some are not. And how do you differentiate between the ones that are good information and the ones that are not? Well, if you see a guy just sitting in front of a camera and just talking all day long, then he's just talking. But if you're like me or what you're planning to do, go out to the site, show real life example, I think that hits people a little bit harder. The authenticity is what's gonna,
Yeah, we're not necessarily, I may do some office content talking about some type of education. But yeah, walking the site with my builder and going, and I'm still learning, right? It's like you learn on every project. I'm sure you're learning.
Every project's different, man.
Yeah. And so for me, it's like, I don't want to be one of those social media guys. I'm not a flashy person. I don't drive like super fancy cars. I just want to educate people. And for me, I was like, I guess you could call me a high W-2 earner, being a pilot. I have doctors investing with me now, and I'm just trying to share like, hey, you can get out of your W-2 job. I'm probably 2 years away to, if I want to walk away, I can. And it's been a lot of hard work.
It is.
But there's so much free information out there right now. On YouTube is a great platform. Following the right people on Instagram. But it is hard because there's some people that some are selling you too much.
They're just selling it and they're just regurgitating what's already out there. So if you can be specific on what we showcase and how we educate people, I think it's gonna go further along the way. For me, I have about 4 or 5 properties that I always own and work on at the same time. I think that's my comfort level. We definitely can always increase it to 10. Before, when I was doing work for client, we always have about 20 plus project a year. So we're managing high volume number of projects throughout the year, and the business was great. But I just think that now building your own projects, man, I'm gonna be able to scale my portfolio, 10-fold in the next 5-6 years.
Yeah, that's great. So how big is your team? I mean, that you're employing staff full time to work on your own projects.
Yeah. So before, when we were scaling our business model, I mean, I had 70, 80 people, employees in-house. And now we're scaling it down just to focus on my property and my project. So we're about 20, 30 capacity, but it's still a great amount of people.
Yeah, I mean, that's a lot of people, and for me, one of the things, even though I like people, I like having conversations like this and learning and this and that. And I know I have mostly partners. I have a couple like contract staff, but if it doesn't work out, it's really easy to be like, hey, it's not working out anymore.
Correct.
One of my things is I don't really want employees. And by doing mostly what I'm doing, besides a bookkeeper and a graphic designer, but like it is a sense of relief that I don't necessarily have to make money to provide to pay employees. Also, I have to make enough money to do pay my contract employees. But if for whatever reason 1 month it doesn't go well, or I don't have a project coming due and I don't have a budget to put out a ton of content, it's not a big deal. I just don't do the content.
Right.
But yeah, I'm sure you have some added pressure to perform, and the asset and your investment's got to do well because you got 25 people relying on you to do well.
Oh, bro, trust me, that pressure is always going to be there. Now it's just about how much of that pressure you want to deal with. So by not taking on clients, my pressure went from 100 to now maybe about 30.
That's great.
Yeah.
I mean, it's something that I'm chasing. Some people chase money.
Sure.
I'm chasing the freedom.
Yep.
And for me,
same here, man.
By having equity partners, they're not employees. We work together.
Yeah.
We have a director of development who's a 20-year GC.
Yeah.
I have a CFO that's a great buddy of mine.
Yep.
He's solid. He handles legal docs, banking. That's what he's doing right now. Yeah. I'm like, let me network. I'm a
do
people
what you're
person.
good at.
Yeah. And you know what's funny is me and him met at a yacht party at a real estate meetup.
Yep.
And we just talked about what we like. We both like working out. He wants to have kids. I have kids. He surfs. Yeah. He was getting his pilot's license. It wasn't hey, I'm looking for a CFO, because I wasn't.
Yeah.
I'm pretty good with finances, but then when I realized he helped me realize you need to get out there and relationship build and do what you're good at.
Yeah.
And it's kind of always growing my own skills.
Yeah.
And I think that's just part of life.
I think it is part of life, man. Even for me right now, like what I'm working on is trying to create a different funding model, because I think that when we were trying to see how we were going to scale this ADU play for us in our own portfolio, syndication was one of the thoughts, but we decided to try investor deal per deal. And I thought that was too transactional for me. And then what happened also is that some certain deals, because of the ADU, sometimes lenders don't understand the exit of it fully, and it drags things out, and investors don't like that. So I figured that, probably the best way right now for us to approach bigger deals and do more numbers is to probably create a fund and go that route instead of giving equity.
Yeah, and I like that. So right now, my business, we do syndications as well. In my opinion, it's challenging, but I think it's how most businesses start.
Most of them, yeah.
Because you're starting with relationships you've already had.
Right.
Hey, I've done a bunch of real estate, but I'm doing new real estate.
Right.
So we're about to break ground on our first industrial project. Sure. So it was a lot of just main contacts that believed in us. They know that we work all day long on these deals. And for us, we partnered with a builder that's been doing it for 20 years.
Sure.
They've done $450 million in Houston alone, and they built 250 of it. That's an industrial expert to me. So when people ask, oh, it's pretty risky. Hold on. We know finances very well. The budget is good. We have a lot of contingencies. Yep. So I had a phone call with a bank earlier today on our second project. Yeah. And they're kind of questioning our underwriting. I go, hold on. I understand you guys got to analyze risk.
Yeah.
We as a business are so conservative because investors matter to me, because I've been in, I've invested in other companies and projects, didn't like the communication. And we all know that there's delays in real estate, especially development. We're dealing with it right now. But guess what? The communication is what matters. Sure. And then, so you got to be honest. I'm honest with the investors. Yep. I personally do all the monthly updates. And then I also add some positives.
Right.
Hey, we underwrote at $220 a square foot.
Yeah.
And our broker has $250 per square foot contracts right now down the street. Yeah. So there's a lot of upside, even though we're 1 month behind. Yeah. It's like, are the investors going to be real mad if it goes one extra month, if I communicate well, but they get more money? Yeah. They're probably going to be okay, but communication's key.
And one of the things that if your listeners focusing on our topic is that understanding the balance and how to structure the deal appropriately will help things move a lot faster. Because even if you're telling the lender that, you're able to get it done for cheaper, even cheaper, they're going to start questioning it. It's too expensive, they're going to question it. So make sure you understand where the middle mark is. And make sure that you give them the correct numbers, because otherwise they're just going to look at you and like thinking like, is this deal for real?
Yeah, because they have already probably done these deals in the area, in the market, and they have their data. They kind of know what it should be and what the cost about should be. And if yours look weird, like today's call was, we want to make sure you're not double dipping on legal. Hold on, there's 2 different sets of legal because we're a building we're doing right now is we're selling them as condos. Even though it's an industrial warehouse, we're selling them individually because it's a very good exit. And they go, well, what are these other legal fees? Hold on, this is all the syndication costs. These are to protect all the investors and startup costs. And so we had to explain that. They thought we were double dipping. And it's like, hold on, it's all here. But you have to explain it to them.
Explain to them.
Yeah. So I think for me, I don't know how in the commercial market for loans, it's way harder than residential. And that's been the biggest eye opener for me, even with all this experience, extra liquidity, all this, it is so much easier in residential.
Bro, that's where my first mistake was, because I entered the ADU playing as a residential play. With the bonus program, these are all now considered commercial play. So for me, thinking like you, that it's easy, lending can be just done like that, especially when you have liquidity, you have reserve, you have assets. Well, dude, it's a whole different ball game with commercials, man. And so we had to learn the hard way, and we thought a couple of deals where it might take us 30 days to close. It ended up taking us 120 days to close, right? So a lot of ADU investors who are brand new don't truly understand that, and I think that what gave me some issues in the beginning when I did some investors and syndication models. And so from that point there, we learned that since we're now dealing with commercial play, we're going to go and try to create a fund and get things done this way, man.
Yeah, and that's kind of why I'm leaning towards a fund probably sooner than later.
Sure.
I have a couple calls this week.
Yeah.
One thing I like about the fund is that you can use the fund if you're raising money in it, and there's actually money in the bank in the fund.
Right.
You can use that as liquidity to help with commercial loans.
That's correct.
That's a very big hack.
That's a big dude. Dude, that's huge, because a lot of times these lenders, they just want to know if shit hit the fence and you can't make certain payments or the delays happen in your build, who's paying it? Who's paying the monthly, invoices or bills, right?
Yeah.
Do you have enough floating in there? And if you have $5 million, $10 million in the bank just sitting there, it's just a no-brainer for them.
Yeah, and like right now, we have so many projects going that liquidity is not great because they're in different accounts.
They're in different accounts, yeah.
Like I'm like, well, I have $150,000 in an EMD right now for my deal closing next month, and they don't count that as liquidity. But I'm like, because it's liquidity, I can't pull it out.
Correct.
I'd have to cancel the deal.
Right.
And then like I have a mobile home park closing on Friday that I'm going to get 150 from. And that's actually going to help because they're looking at it going, I'm like, well, I'll roll it right into this account and they'll count that as equity. I'm like, great. So Friday, I'll show you a wire. It's coming from a closing.
See, and that's going to take a week or two.
Yep.
You see?
So it's going to slow my process.
Yeah, bro. So a 30-day escrow or 60-day escrow is out of the picture when you're doing commercials, man.
Yeah. And that was a big thing for me. I mean, I'm still learning in the commercial space. The reason I want to launch a fund as well is it gives you better buying power and speed.
It does. Bro.
So, we're probably going to launch like a $10 million just industrial fund. I have a couple calls with people that are running funds to see how flexible I can get because I don't want it to be so narrow that it can only buy or develop buildings.
Right.
I'm like, well, what if we buy some land and do some entitlement deals and then sell them before development? So that's what I'm focusing on now. I think it'd be great I'm not trying to expand my business. Yeah. I'm just trying to talk about what we talked about earlier is having 3 or 4 different exits. So if we do a land entitlement and we have enough money to develop it, but some developer, my broker brings me someone.
Yeah.
There's a lot of developers out there that don't want to go through the development, the permit process because it's a lot of risk.
Yep.
But I feel like if you know enough and you have the right team, the right engineer, they know the city codes, I'm okay going through that process.
Right.
So I want the fund to be able to exit and continue making money for people on the safest way and give me that control.
Yeah, I agree.
So with your fund, are you focused on launching the fund and buying more and more properties due to the competition? So you want to raise a larger amount of money to lock up more properties.
That's correct. That's the play where we're trying to lock up as many properties as we can. And we just don't know how long this AD bonus program will be around for. I mean, we hit some snags in the beginning of the year with that potential repeal. Luckily, it only is going to get a reform. And so it's going to stay around for a little bit, but we just don't know how long that's going to last. So what we want to do is we want to acquire as many property as we can, put on permits and plans for them, at least get it through the city process fees. Once the fees are paid, you're locked in, right? Nothing's going to happen to it.
Yeah.
So, once that's going to be in play, then the next plan after that is just to execute and build them out.
Yeah. Right. So speaking on that, where do you kind of see the market going in the next 12 months? Like the real estate market?
Real estate market?
Yeah.
I think currently right now it's kind of either stagnant or slowing down. San Diego, I think we're still okay. I still see how it's moving. But I see a lot of properties that are sitting in the market for a longer term time. And they're getting dropped in price a little bit. Some properties you see drop 20K here, 50K there. But the market's going to be good after this year, man.
Yeah.
It's just a lot of uncertainty right now.
Yeah, I think there's a lot of uncertainty in the market. Yeah. I have numerous conversations where I'm in Houston, Texas, building industrial. There's like almost no supply. Yeah. So if you're in a low supply, high demand market, and I don't do housing, maybe houses will be affected. I don't think my asset class is going to be affected. So that excites me, even in the uncertainty.
But see, that's the commercial space. But when you look at it on a standpoint of even residential, the supply demand is there.
Yeah.
It's just people are not buying because they're just not sure what's going to happen, or they're just waiting maybe potentially for rates to drop.
Yeah.
So they can buy in a little bit better price. So, I believe that the supply demand is still also there for residential. I don't think that it's going away anytime soon because of the shortage we have.
Yeah. And I completely agree with you. I think in residential, at least in my opinion, people are more receptive to like fear. They're more fearful.
Yeah.
So if they're not really sure on their job, maybe they're a government employee and they're a little bit worried that Doge is going to clip some jobs, and it sounds like they have been doing that. I totally understand. Like, don't go upgrade your house or relocate the family and you're not sure about your job.
Right.
So I think that slows down.
That does.
And rates are uncertain right now.
It is.
You really would think that I think Trump wants to start bringing them down to stimulate the economy, but you kind of can't bring them down too fast. Yeah. Especially with the volatility of the stock market, with his tariffs going on, who knows what's going to happen with that?
Who knows what's going to happen, dude?
I think renegotiating tariffs, like there's plenty of videos, like Pelosi and other people and Obama, they've wanted to renegotiate tariffs, and it just kind of didn't fully happen. But Trump's kind of playing with fire to see what happens. So we're all kind of waiting. Are the cost of materials like lumber and steel going up? We're kind of waiting.
We're waiting to see. I mean, we're anticipating a 8 to 15% increase.
Yep.
But we're waiting to see. Nothing has happened yet.
Yeah.
So we're waiting to see what's going to happen in the next 6 months as far as material goes.
Yeah.
But in the sense that I'm building it for myself, I don't think it's going to affect me that much because I'm keeping costs down on the labor side. But for a lot of ADU investors or real estate investors, I can see the potential problem that might cause.
Yeah, so it's definitely bringing that. So how long are you forecasting as far as you mostly build in San Diego, correct?
My focus is in San Diego.
So how long do you think you have a window? Is it a couple years to really take advantage?
I believe so. I believe the next 5 years, right? Depending on who's, the next mayor, they might change things up. You don't know that. So nothing is 100% guaranteed. But currently, I think that in the next 5 years, things are still looking good for us.
So would you say your prime focus is head down, 5 years, raise money, buy as many properties as you can, and build as many ADUs as you can within your lines?
Within my lines. Because when you look at it from a real estate investing product out there, I mean, we're anticipating about 25 million to put into our play, and this 25 million is kind of 5x for me. What other real estate investing vehicle can you get that kind of return? Yeah, right. In such a short amount of time frame.
Yeah. I mean that's really fast.
That's really fast.
I mean, I think you see a lot of multifamily operators and stuff. They're doing what 2x, 2.5 in 10 years.
Right, 10 years.
I mean, that's what you're seeing out there.
Correct.
And it's part of the reason I don't invest in those.
Sure.
Like, for most people watching, doubling your money in 10 years, it could sound pretty good, right? But what if there's better out there? And that's what, for me, led me to industrial. I mean, if I wasn't doing industrial, I'd probably be in San Diego, in North County here where I live, doing the ADU
No,
program.
I think that your commercial place also very similar to the ADU strategy in some ways.
Yeah, and I
And
think you're in early, right?
Yeah.
And I think that's a big target. So we were flipping homes and doing all the small multifamily. We were looking at multifamily, which a lot of our friends were doing.
Yes.
And it got too competitive. They're selling at 5 caps.
Yep.
And so it would take you too many years to double my money. And I'm like, you can't make money.
Yeah.
Like those people are very wealthy already and they're conserving their money.
Right.
And it just didn't work for me.
No.
And then we started looking at storage, self-storage. Great product. It'll always be a need.
Yep.
But it seemed like for me, everybody in 21, 22 started looking at storage now. AJ Osborne, great storage. He blew up too.
Yep.
And it was too competitive.
Yep.
We were underwriting deals all the time. And a bunch of investors were ready to go in storage. I go, hold on, I can't find one that really excites me.
Yeah.
Because 2X with all that work is not going to excite me.
That's not going to excite me. And I've heard on some deals, the cost of barrier to entry is about $5 to $8 million per deal.
Yeah.
Yep. That's a lot, dude.
So what's your average purchase price on a home that has a lot that you can put ADUs on?
A single family I can buy for about below $1 million. And to put 6, I'll give an example, to put 6 units is going to cost me about 1.1 million. So all in, I'm at 2.1. And because we know right now in the same market, they're appraising about 400,000 or 500,000 a unit, 6 units is going to give me about $3 million exit on that deal.
Wow.
Right. And all in with the front property, I'll probably exit with the 3.6, 3.7. So immediately 12 months done, I have $1.3 to $1.5 million built in equity.
Yeah.
We're going to cash flow about, probably our NOI is going to be 60, 70,000 a year.
Yep.
And our, IRR is probably going to be about 20 to 30%. Dude, nothing's going to beat that right now.
Which is great. And number one, you're doing it in your backyard.
Yes.
You can drive by your developments all the time. You can drive yourself into the city.
Yep.
I'm sure you have people that do it, but it's like, hey, if you want to take it in your own hands, go, hey, I'm checking up on the project today, make sure all my guys are working.
Yeah.
There is something to say about that.
There is, bro. And then for me, even though I have a team going on, but I always make sure I go make my site visits.
Yeah.
Yeah.
And for me, we're mostly invested in Houston.
Right.
I'm out there every 4 weeks.
See?
And it may increase when I have 2 or 3 projects going. Number one, I'm out there to make sure my builders are doing and the paperwork's going. I like to be present. I'm meeting lenders just to network, and they like shaking your hand. They're not coming to Carlsbad to my office.
Right.
They're from Houston, but they're like, hey, let us know when you're going to be here. We'd love to go to lunch, and we really want to meet you. I think at least for lenders and builders, my builder, I know when he met me in person and just saw that I was a real person, I'm like, oh, he's actually pretty smart. You spend a couple hours with someone. He impressed me, and I think I impressed him.
No, most definitely. I think that the lending side of things, I've only met a lender that actually met me on one of my sites one time. But I can tell you that that relationship that we had is so different than any lenders that I've ever dealt with. And that's definitely something that I want to take and learn from, because since I see not just on building a portfolio, but I'm also dabbling into getting into the lending space as well for the ADU investors, because I see that need there, and there's just nothing out there right now for it.
Yeah. Do you want to get into that a little bit?
Yeah, I mean, it's still in the works. But we're looking at potentially creating a lending product specific, just focused for ADU investors.
Yeah.
That needs to get a construction loan to build out their 1 or 2 unit. So we will lend you on that for $400,000 to $600,000, and we're trying to make it as streamlined and as easy as possible. But of course, we have to stay in compliance and make sure that all the regulations gets, is tightened up.
Yeah.
So we don't get in trouble for it.
Yeah, because I know for me, I was looking for loans, and it's really hard to get on an ADU, because banks are like, well, hold on, we don't really, there's not too many sales in your area. We don't know how to underwrite and how to loan. I may have a lot of equity in my house right now, which is great. Yeah. But they're looking at going hold on, but you want another 350. Yeah. So it's a
lot of lenders just don't understand how to underwrite it appropriately, and then they don't understand the exit of these play. It's still too new.
Yeah.
And I don't blame them for that. So they rather go back to what they already know, which is the fix and flip or just regular ground up construction.
Yeah.
And if you do talk to a lender who is going to say, hey, yeah, we can do an ADU construction loan or something like that for you, they're going to try to be creative. They're going to throw you over to get a HELOC, loan out to build it, or they give you into a construction loan. But the construction loan, they always require at least a 5 exit experience,
Yeah.
a track record, and most ADU investors barely has one or two.
Yeah. Because it seems like ADUs are a great place to start if someone's newer into real estate,
Right.
and maybe it's like they already own a property,
Right.
but they have a decent amount of dirt in their backyard.
Correct.
I mean, that's their primary residence.
Yeah.
And I think it's a great place for people to start, especially in California right now.
Especially in California.
But I did not even know about Florida and New Jersey, and the states are opening up to it. So that's great for the listeners. So let's talk about, real quick before we wrap up, tell me about like a big win that you had recently that really excited you a lot, like maybe a breakthrough.
I think one of my biggest wins so far has to be the ability to acquire 5 properties, each of them being able to put up their 7 to 12 units. That's a lot, bro.
Yeah.
Out of this 5, when we're done exiting out, we have 30 doors that we're renting out from, and we have humongous equity play on top of that. So that's a big win for me right now, and I'm hyped up about creating the funds to go out there and tackle more.
Yeah. I mean, that's a lot of properties.
That's a lot of properties.
What was the time frame that you bought all those in?
7 months.
Yeah, that's pretty quick.
Yeah.
Yeah.
Yeah, I'm at it, dude.
Yeah. And like you said, it's something that you can acquire each one for around $1 million or less, depending. So you don't need a ton of equity because the lenders are going to lend you as a rental property with 25% down. I mean, so yeah, you need some equity, but it's not like you're buying a $10 million commercial unit, but you're still making that much equity when the buildings start coming in.
Yeah.
And what I like about it is, for you, it's super scalable.
It's scalable.
It's like a rinse and repeat. Repeat. Continue the same amount of permits.
And the thing people don't understand is that when you're looking at ground up development, like I'm in construction, so I always try to find the cleanest way and the easiest way to get things done. Simplicity, right? There's other plays out there right now for some of you listening, but that's called community play, where you can put 20, 30 units in almost like an apartment complex. Those builds are great too, but the complexity to build those out is a lot longer. And you're not able to tie into the existing house infrastructure of the property. You have to do new sewage, new utility, new electrical. Everything's brand new to this big play, and that's going to take a lot more time and money. So with the ADU, it's easy, man.
Yeah,
in and out.
Yeah, and I didn't understand the cost when I started looking at, hey, well, if I'm going to build, I own a lot next door to my house as well. Yeah. And like the water meter is $25,000, and every city is different. Some cities are like, oh, it's $5,000 and we'll do it for you. Oceanside is $25,000 to buy the water meter, and you have to install it. And the main water line is like, I don't even know how many feet long, but it's like, to put this water meter is going to be $50,000 for one water meter at my property. So I'm like, we're going to build the ADU first before we build on the other lot, because holy cow, it's expensive. It's expensive. And like you said, the ADU, it's like, no, you can just run the sewer and tie into your main under your driveway. And I said, perfect. My driveway's old. We're going to leave it looking like crap right now, because we're going to be redoing water lines off of the main house line. Yeah. And that it's much more affordable to get a house done instead of start fresh.
That's correct.
That's a pretty good tip.
That's a great one. And I think that for your listeners who's also paying attention, I mean, there's so many different real estate investing vehicles now that we start talking and dabbling more. I mean, there's community play that I just mentioned. There's my ADU play. There's your commercial space, flex space. But I think one thing that people fail to realize is that they need to stay dialed into what's working and just focus on that. I think everyone's all over the place sometimes. Oh, there's, people making money with fix and flips, or they're doing that. There's people doing wholesaling, so they're jumping on that. And later on, they're like all over the place, right? I think it's best to just stay focused in your lane.
Yeah, and I agree with you. And I think even me as a newer investor years ago, that was kind of an issue, right? I mean, you started with the duplex and then did some fix and flips, and then I did some short-term rentals. I learned a lot from each one. But the problem is, and then I had a mobile home park, and then I did a development, then I bought a commercial building, and I'm like, it's not scalable that way. Right. And I was on the phone all the time, and my kid knows that. He knows it now and he gets it, but he's like, I was just on the phone all the time doing fix and flips. Yeah. And it's something I didn't want anymore.
Right.
And hey, the fix and flip's great. You could definitely make some money, but I literally was on the phone 60 times a day dealing with contractors. Where did you want the white tile? It's like, come on, man, I wrote it all out for you. It's, at least for me on the commercial side, I'm dealing with real builders that have subs in the plans or in the engineer, and I don't get phone calls on that. Yeah. Like, it's less. But the biggest thing for me is I tell people there's 100 ways to make money in real estate. Yep. You can do private loans. You could do this. You can invest in multifamily, the RV parks. There's glamping. There's all kinds of new assets out there. And what I think people should do is work backwards. Yep. Like, what's your end goal? My end goal, I'm 43. I'd like to be kind of all done by 50.
Yeah.
All done meaning I'm not scrapping for money to pay my mortgage. I want all my homes paid off, and I want comfortability and having cash flow from real estate.
Nah, man.
I'll be able to do that in 7 years, but what's your exit, right?
Yep.
If you're young, go do a bunch of house flips. You got energy.
Sure.
But if you got family and kids, like, I did it enough when my kids were little where now I'm trying to peel back. And that's why I brought in partners, equity partners in my business that they help me do a lot. Yeah. I can't do it all where I used to feel like I did it all or a lot.
I totally agree with you. I think that understanding your exes is huge. And if you talk to any mentors out there, they can ask you the same thing. Like, what's your exit? You know what I mean? So I agree with you to that point. And I also agree that depending on the stage where you're at in your life, your exit might be different. Mm-hmm. So just understanding that and having that exit work backwards, I think that's great, dude.
Before we wrap up, let's talk. If you could pick, let's say 2, I think it's hard to pick one book, you know, what are 2 books that really changed your mindset and really have helped you get here?
I think for me personally, it's Buy Back Time by Dan Martell. And then at my lead, One More, Power of One More.
That's a great one.
I love that one.
I watched a speech of his at the boardroom because it was in there. And I'm like, man, he is a really good speaker.
He's a great speaker, but he just speaks from reality and things that he's gone through in life. And there's so many things that we as entrepreneurship can connect with and relate to. So, dude, when he was at the boardroom just sharing his story with us, I can kid you not, man, every single person in that room cried, man.
Yeah. I watched it in a video and probably had tears. It was a couple of weeks ago, but I was like, wow, that guy can tell a story, but it's from the heart.
It's from the heart.
You know, he's not selling you. He's making you believe in yourself. And that what I got out of that speech is that sometimes you're doing things for a higher power.
That's right.
Just overall. Like, you may be working to make money and working to help people make money. And I like helping provide to people. Yeah. And we're providing opportunities for people to increase their wealth.
It is. And you know, the thing in all this journey that we are going through is that we talk about all the highs, but we never talk about all the lows. Mm-hmm. It's a big sacrifice what we're doing, man. The shit that we go through year in, year out, you know? No one talks about that shit.
Yeah, and that's kind of what I want to do with this podcast, is talk about losses. I had a big loss of money last year. Oh, yeah. And it was pretty hard when I got an email from an attorney saying, that project is wiped out and you lost it. And man, people had to help me recover from it. And my girlfriend was going, are you going to be okay? Yeah. And it's like, hold on, this is pretty hard to deal with. And that's part of business, I think.
That's part of business, bro. And not only that, but that's life, bro. Mm-hmm. We're not perfect. Yeah. We all have certain things where we make mistakes on. Yeah. But the whole most important part is that when you do make a mistake, do you own up to it? Did you learn anything from it? Or are you going to take action from that?
Yeah. What's your last question? What is your biggest piece of advice for someone, you know, let's put you back 8 years ago. Sure. They're just starting out. They're pretty confident in themselves. What's your biggest piece of advice overall, just as a business and as a real estate investor, that you could give to help them succeed?
Before going out there and trying to do it yourself, get a fucking mentorship. Yeah. Join a mentorship program because it's going to take you so far. And that 20 or 30,000 that you're investing into that mentorship program, bro, it's going to come back to you tenfold, man.
Yeah. And I completely agree. And I wish I would have done it sooner. Yep. And honestly, there's mentorship programs that are cheaper. Sure. Not everybody can afford 20 grand, but I've seen them out there for like, I'm in one that's $97 a month. Yeah. Like, and you'll get out of that whatever you will put in.
That's correct.
And so if people are starting out with lower money, still get a mentorship. Yeah. And honestly, if you have something to provide, like, you might not have to pay anything.
That's true, bro.
You know,
believe it or not, I mean, mentorship program like the Boardroom does cost money, but there's a reason for that. I mentor people on the side for free because I don't believe that I should charge people for it. I'm giving back. But, you know, like you said, I mean, just have a mentor out there.
Yeah. Yeah, I think having a mentor and having the mindset and the belief that you can do it, because anyone can do this.
Correct.
Let's be real. We may think we're smart and, you know, I went to college, whatever. I'm going to a meeting right after this to learn from someone better than me.
Yep.
So I think being humble and going, man, okay, I'm new. I'm going to learn. I've been in this 10 years and I'm learning every single day.
Oh, bro, nonstop learning, man.
Yeah. So, well, hey, thanks so much for coming on the show.
I appreciate it, man.
Love learning about ADU. I can't wait to come walk a project with you. And thanks for sharing to listeners. So thanks for listening. Captain Curt Show. We'll see you on the next one.